We're jumping straight into Robinhood today. You just cannot ignore this stock.
No, you can't.
Everyone has been watching the price action, and it has been, well, absolutely dramatic.
Hmm.
I mean, we saw this stock peak at an astonishing $153.86 back in October.
Right.
That's a massive 215% gain for the year. It just completely dwarfs the S&P 500's, what, 17-18% return?
And that price action, that's the headline. But for us, the real story is in the fundamentals.
Okay, let's unpack this then, because the core catalyst driving all of this drama, it really comes down to the third quarter of 2025.
Exactly. I mean, forget the chart for a second. The business itself reported record net revenues of $1.3 billion in Q3.
100% year-over-year increase.
100%. I mean, that kind of doubling, it's just incredibly rare for a company at this scale.
So what drove that? Was it just high interest rates, or were people actually, getting back in and trading?
It was overwhelmingly driven by trading.
Mm-hmm.
Transaction-based revenues did all the heavy lift. And if you dig even deeper into that number, the real standout was crypto.
Mm-hmm.
Crypto revenues were up over 300%. That tells you everything you need to know about where the speculative money and the enthusiasm is. It's a major comeback in engagement.
You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us as we navigate all this complexity.
And if you're enjoying the analysis, please make sure to subscribe and, hit that like button. It really does help us out.
And definitely let us know in the comments which stock you want us to simplify next.
All right, so let's get into the financial foundation. 100% growth is great, but it begs the question of sustainability.
Right. Is this just a temporary tailwind, or is the business model actually getting stronger?
That is the critical question. And when you look at the Q3 performance, it's impressive beyond just the top line. So past the $1.3 billion revenue, profitability surged, net income rose 271% year over year to $556 million.
That profit increase is huge. Does that signal they've finally, achieved the scale they needed, that they're past that early high-cost growth phase?
I think it does. It suggests some serious margin expansion. They're proving that their tech platform can handle massive volume without costs ballooning alongside it. That's really the hallmark of a maturing, tech-driven finance company.
And it seems like analysts are buying into this idea that it's a structural shift, not just a cyclical one. What are the forward projections looking like?
They're very bullish. The consensus is projecting earnings per share to climb, 82.6% for the full year 2025 to hit about $1.99.
Okay.
But what's more telling is that they expect it to keep going, another 20.6% growth in 2026, up to $2.40. That tells you they don't see a cliff edge coming. They see sustained growth.
It's not just the income statement, though. You always have to look at platform stability, customer commitment, that kind of stuff.
Absolutely. So total platform assets hit a massive $333 billion in Q3. That's stability. But I think the most important numbers are around the customers themselves. They hit 26.9 million funded customers in November.
That's up 2.1 million from the year before.
Exactly. And that's a powerful sign that users aren't just opening accounts for fun. They're actually putting capital to work on the platform.
And that capital's flowing in.
It really is.
Yeah.
Look at the cash flow. They saw $20.4 billion in net deposits just in Q3 alone.
Wow.
That shows a really robust, continuous cash flow. And for a high-growth company, that cash is everything. But we have to ask why that specific figure matters so much.
Well, that's where I want to push back a little bit. How much of that cash flow is just coming from high interest rates on cash balances, which could be temporary, versus, real efficiency from new products?
That's a fair point. For sure, the interest income got a macro tailwind that might soften if rates fall. However, the sheer volume of deposits, that $20.4 billion, it shows really deep engagement.
So what does that let them do?
It lets them reinvest aggressively into future-proofing the business. We're talking about building out sophisticated AI tools, making a serious push into wealth management, basically funding their pivot away from just being a trading app.
And that pivot brings us to their competitive advantage, their moat. I mean, for a company that got famous for zero-commission trading, what actually makes Robinhood sticky today?
Well, their primary moat is just the sheer scale of their network effects. You have over 25 million funded accounts, and that volume, plus all the user data it generates, creates really high switching costs.
But high switching costs isn't just about having an account somewhere. What specific services are locking people in right now?
It's the whole integrated ecosystem. They've done a really good job of blending trading, crypto, banking features, and now this critical push into AI tools and wealth management.
So it's the all-in-one appeal.
Exactly. If you're getting interest on your cash, you can easily buy crypto, you have advanced trading tools. The effort to split all that across different competitors is, well, it's significant. They're building a walled garden.
Which means they're fighting a war on two fronts, right? They're trying to compete with traditional brokers on one side and these nimble fintech apps on the other.
Absolutely. They're going up against trusted names like Schwab for the serious money, while also trying to defend their core users from apps like Chime that focus on, say, high-yield banking.
So the strategy is to be the one-stop shop.
It is. They're using their massive user base to scale into these new areas very, very quickly.
Okay, this is where it gets really interesting for me. The technical momentum. The fundamentals are screaming growth. But does the chart actually back that up? Or is it getting ahead of itself?
The chart has been, well, a textbook example of accumulation all through 2025.
What does that mean exactly?
It means the stock has formed a very clear higher highs and higher lows structure. That's exactly what big institutions look for in a confirmed uptrend. After that huge 230% surge, it's clear that sophisticated buyers are stepping in on every single pullback.
And for those of us who don't live and breathe charts, what are the technical indicators like the RSI or the MACD? What are they telling us?
That's a great question. We're actually seeing what's called a constructive bullish divergence.
Okay, in plain English.
In plain English, it means that even if the stock price takes a little breather, the underlying momentum, the buying pressure, is actually getting stronger. It suggests the next big move is likely up, confirming the bullish trend.
And that lines up with what the analysts are saying, which we touched on earlier. What kind of upside are they actually forecasting from here?
The technicals and the fundamentals are really in sync here. The consensus price targets suggest an average upside of about 33% from where we are now.
So targeting around $155, $156.
Exactly, which is significant confidence. It implies the market sees those efficiency gains and the expansion into new revenue streams as real and sustainable.
And some are even more bullish than that.
They are. Some of the higher targets go all the way up to $180, which would be, what, a 53% upside potential. The mood right now is just predominantly bullish, and it's all driven by those incredible Q3 numbers. But every strong growth story, no matter how good it sounds, has challenges. Before you get too excited, we have to talk about the risks. What are the top things to watch right now?
The main one, and it's the elephant in the room for any hot tech stock, is valuation. We have to talk about that forward earnings multiple.
Yeah, when you look at it, it's trading at around 60 times forward earnings.
Which is high.
It's significantly higher than the sector median. I mean, by any traditional model, that suggests the stock is technically overvalued.
And what does that mean for an investor? When a stock trades at a 60x multiple, what is the market actually demanding from the company?
It's demanding perfection. A multiple that high just removes any margin for error. The company can't just meet expectations for the next quarter or the next year. They have to consistently beat them.
A small miss could cause a big drop.
Exactly. A miss could lead to a swift, severe pullback. That valuation is pricing in years of success, not just one good quarter.
We also saw some insiders selling right near those 52-week highs. That always makes retail investors a little nervous.
It does. It sends a psychological signal for sure. The chief legal officer sold about $3.6 million worth of stock.
Right.
Now, to be fair, the sales were described as pre-planned, which helps. But still, cashing in millions near the peak suggests that at least some insiders thought the valuation was a pretty good opportunity to take some chips off the table.
After a 470% run-up, you can't really blame them.
You can't. It's a data point you shouldn't ignore, even if most analysts see it as neutral given the circumstances.
So high valuation, demand for perfection, some insider selling. Are analysts actually worried this is going to derail things?
You know, it's fascinating. Many believe those risks are already priced in. The consensus is still quite bullish because the core growth, that 100% revenue jump to 27 million customers, it's just so compelling. The momentum is just so strong right now.
So if you're tracking Robinhood, you need to be watching the calendar. What's the next big event that could either confirm the bull case or, trip up that valuation?
The next major event is the Q4 2025 earnings release. That's expected in early February 2026.
And the consensus expects another beat.
Yes, consensus is for continued strong EPS and revenue beats, especially if crypto volumes stay high.
And what about outside the official numbers? What's the speculative chatter to watch for, the potential catalysts?
There's a lot of speculation around M&A. Robinhood has the cash, and they might look to acquire a smaller company to quickly bolster their AI or their wealth management tools.
That makes sense. Buy the tech instead of building it from scratch.
Exactly. And the other big one is regulatory. Any kind of positive regulatory news for the crypto sector could really amplify trading volumes and enthusiasm, which, as we saw, is still a massive driver for them.
So let's bring this all together. When you connect the huge customer base, the efficiency gains, the strategic pivots, what's the ultimate takeaway for you right now?
I think the takeaway is that Robinhood is in the middle of a successful transformation. That 100% Q3 revenue growth and their base of nearly 27 million customers, that's a really strong
And they're
foundation.
building on it.
They are. The blend of their network moat with its aggressive expansion into AI and wealth management suggests they're setting up for a multi-year growth story, which helps justify that high multiple.
And we also noted the broader macro environment could give them another tailwind, right?
Absolutely. If we see potential Fed rate cuts in the coming years, that usually boosts risk appetite and trading volumes. Plus, it still helps their interest income streams. They've diversified well enough to benefit in a few different market environments.
That's the lowdown on Robinhood for today. We've established the company is successfully pivoting from a retail trading app to trying to become a full-fledged financial services powerhouse. But here's the question for you to mull over. If their next phase of growth really relies on selling high-touch, premium wealth management services to justify the 60 times earnings ratio, does their historic brand known for zero-fee trading and gamification actually become their biggest strategic liability in trying to attract serious, long-term investors? If you haven't already, subscribe so you don't miss our next breakdown. We'll catch you on the next one.